Good morning, good afternoon, and good evening, everybody, from wherever you are in the world today. I'm coming to you from my remote office here in beautiful New Jersey, and I am super excited to have my friend and colleague Haresh Chaya on here from the SAP Treasury Solution Management team. Good afternoon, Haresh.
Hi, John. Good to be here.
Oh, we're so excited to have you. It's been a little while since we've been together, and I'm excited to dive into this topic. So with that, we'll get started. So we'll do some housekeeping in a couple of minutes. We'll get through that. I'll introduce some of you folks to the digital solutions economy, because that will form part of the foundation of why we're here and talking. And then Haresh and I will go into and we'll talk about the implications of this idea of the digital solutions economy and what we're seeing as companies execute new business models and the implications and impacts on cash, banking, treasury. And so we're going to do this in a kind of a fireside chat. We'll bring up some subjects. For all of you who are out there, please feel free to ask questions throughout the webinar. And then certainly at the end, you are welcome to answer or ask some more questions there. Quick reminder, we are recording this webinar so that you can share it with your friends, colleagues. Go ahead and download it and check it out. You can do our other webinars. Haresh, I think we've done, gosh, well over a half a dozen, almost a dozen different webinars over the past couple of years together. So there's some really great content out there on Treasury for all of you who are interested now. Like I said, you can check all that content out right here. You can go to our homepage and you'll see direct links to all of our Treasury content. But you can also learn more about revenue recognition, leasing, S4HANA, BRIM, digital solutions economy, and all of those solutions. Join us on Facebook, LinkedIn, or go to YouTube, where we have a whole ton of different videos on different subjects. You can check out Apple iTunes and iHeartRadio and join the dozens of new people that we get subscribing to our various podcasts every month, and we'd love to have you be part of that. So with that, I'm going to set the stage here and set the framework for our discussion and remind everybody. A few of you out there are new. Some people have been on these a few more times, but I'm going to remind you of what do we mean by this idea of the digital solutions economy. And this digital solutions economy is really what we call the next evolution of the subscription economy. A lot of companies are out there, specifically one or two of them that we won't mention, but they are talking about the subscription economy. But that, folks, is yesterday's news. Really what we are seeing, and Haresh and I talked about several times as we led up to this webinar, is we're seeing the world changing to all kinds of different new models. Something as a service. You can buy just about everything as a service. In fact, SAP offers RISE with SAP, which is business transformation as a service. You can get software as a service, infrastructure, support as a service, cars as a service. Quite frankly, if you think of Zipcar, it's pay for only what you use, right? You can have cars through Zipcar as a service. You have entitlements that go with it. And so what are you entitled to when you do that? We have dynamic pricing models on such things like Peloton, for example, Chewy.com and others. Uber is a great example of dynamic pricing. You have outcome-based models. More and more companies are moving to outcome-based models. What does that mean? That you're paying for an outcome. Traditionally, of course, as we've done additions to our homes or other projects, we pay for a project, we expect an outcome, an addition finished. We're not paying time and materials, all of that, it's an outcome. But more and more companies are looking for outcome-based models. A simple example of that, of course, is companies that sell printers and sell and base that on the number of pages printed, not on anything else. Usage and consumption-based models, we've been familiar with those with companies like US Cellular. But you can also have many other companies. Our colleagues here from Hillrom, for example, sell medical or lease medical devices. Welch Allen is one of their divisions, otoscopes, for example, and they do those on a consumption-based model for the consumables that go with that particular device. And there are many, many more examples of those, and we're seeing many more companies getting into that. One unique and interesting model that we're starting to see a lot more of, and Haresh and I will talk about this in our conversations and the implications of it, is revenue sharing. A really easy example of revenue sharing model is Discovery. Discovery offers their Discovery Plus stations through Amazon Prime, through Amazon. That's a unique revenue sharing model, and it has implications on collections, on a whole bunch of different items that we talk about. This whole model is really driven by the desire of our customers and your customers, the end user customer, to drive a new model. They want a model that's basically driven by them. They want customer engagement and a customer experience that recognizes who they are, your relationship with them, but only if they want you to. You know, and many of us who have done ordered online. Last night I ordered pizza online, and you can go in as a logged in user or as a guest. Many customers may want that option. You want to be able to have and bundle all of that together if you're ordering online. What's my solution, and how do I determine what those are, and how do I bundle it together? You know, if I'm ordering software, or I'm ordering a game, or I'm ordering food online, I want to be able to create the bundle of items that I want, manage that cart, and then create commerce and click the button. And of course, behind the scenes, many things happen that we'll talk about from a security perspective, from a credit check perspective. But all of that has to happen once you push the button, and then you expect this idea of flexible delivery and fulfillment. You want to determine, just like I did, I made this decision, when did I want to pick my pizza up? Well, you may want to determine, when do I want to receive my licenses over time for software? Do I want to get all the licenses at once? Or do I want to build that license portfolio? And how am I fulfilling that? And of course, that relates to things like entitlements. Unified billing and invoicing is important. Customers want either one bill or multiple bills. I may have one place that I send my capital bills for the cost of a particular item, but if I use rental as an overflow for that, rentals may go to a different budget and therefore a different organization, and I want that flexibility. Today we're going to focus a lot on this section around flexible payments and collections. We'll talk about that in more detail, and of course, customers want you to manage privacy, security, and risk. And they want this when they want it, where they want it. They want the experience to be intuitive and easy to use. And of course, we all love that idea of helpful suggestions. Helpful suggestions, of course, are your way to offer more to the customer and see if you can upsell, cross-sell. SAP and Bramasol have come together to offer a variety of different solutions bundled together, or focused together, if you will, around enabling customers to address this new digital economy, whether it's through commerce and tools such as Ariba, order management, solution order management, supply chain with digital supply chain and entitlements, finance, billing and invoicing, convergent invoicing and charging, cash and treasury, well, we'll focus today, banking, payments, AP, AR, etc. And then, of course, reporting and compliance. And there are tools out there from the reporting and compliance perspective around contract accounting, FICA, revenue accounting, and leasing, which is, you know, the hallmark of what Bramasol brings to the table around our deep understanding of all of these processes. So with that foundation, I would like to move into being able to talk and talk about some subjects around cash and treasury. And so with Haresh and I, we'll be focusing in on this area of the circle, if you will, or the flower of the digital solutions economy. So with that, Haresh, why don't we, just out of a curiosity, from your perspective, I know, Haresh, you talk to dozens of customers um, monthly at least, but probably knowing you weekly. Are you starting to see a lot of these trends of customers moving to these subscription style models?
Yeah, John, that's a loaded question. The short answer is absolutely yes. Everybody is recognizing how, they can benefit from the new business models that are emerging. We have some great names who have been extremely successful in that model. One that a large number of us might be using on a day-to-day basis. I buy nearly something almost every other day from Amazon, for example, and you can see that nearly everything on Amazon is now available on subscription model. And that is exactly what we are talking about. Um, Many companies are thinking about subscription models and expanding them to service as everything. And as they're doing it, they're recognizing that it's not just the front commercial side of the process that they have to think about. It is also the processes that follow, such as what happens on the finance side. And one of the key areas that customers are thinking is, how is it impacting the way I manage my cash, the way I manage my banking operations, the way I manage my forecasting, and so on and so forth. And that is what is driving SAP to think about, okay, so how can we support the customer, not just through those services and everything as a service business model, but also behind the scenes, how they can really use SAP platform to run the rest of the processes effectively as well.
Absolutely. And a lot of it also is about gaining insight into some of the business implications and finance implications. And we'll talk about some of those. We talk about the smoothing of revenue or the smoothing of collections. And as you and I discussed, one of our Bramasol's customers, Vivint, has a home business, or has a business where they do home security, home management tools, and it's all as a subscription. And of course, they've seen a huge smoothing of their overall cash flow as they move into a subscription that is really driven by what we call, we affectionately call payer direct, but automatic debit, right? Automatic payments or credit card payments. All of those have some implications, and there are some specifics around that. So one of the things I thought was very interesting that you brought up yesterday or the other day as we talked about this was we're seeing a change in what's driving collections and what's driving the timing of those. And you rightfully, I think, did a great job of pointing out to me that it's really contracts now that are driving the terms, not necessarily the collection terms that the Treasury or AP department is setting. Can you talk a little bit about that?
Yeah, John. So just elaborating on that point, in the earlier world where our customers would sell their products and invoice the customer, they would have a payment term on the invoice, and this payment term will decide when should a treasury organization or when should a cash manager expect the incoming payment for that invoice. If it's due net immediately, then the cash flow inflow will be recognized on the cash flow analyzer app immediately. If it's 30 days term, then that'll reflect 30 days from now, and so on and so forth. Now, in the new world with these contracts scenarios, essentially, and I'm thinking, one example which I use quite often, Spotify, and I have, agreement with Spotify to use their music and pay them on a periodic basis every month. I think they charge me every month, some $15.99 or whatever. And I don't have to worry about it as a customer. But if you think about Spotify, now their payment terms actually are due net immediately, which means if I'm signed up on the 15th of the month, then every 15th of the month, every month, they will expect a payment from me, which means the cash manager essentially has a due net terms on that invoice. As soon as they would run their billing process, the invoice will become due and they need to collect it from me. But as a cash manager, I still really need to think about what is a contract? I mean, how is it set up? Is it expecting cash flows every month? Is it expecting on the 15th of the month, on the 20th of the month? That information is not in the payment terms anymore, but that information sits in the way the contract is structured. So that is a direct impact of moving from, just product sale to everything as a service model, where contracts will be driving how the cash flows will reflect on a cash manager's application. And there are some repercussions of this, because now you can't just rely on a billing document to provide you the information of when the money is coming. A lot of the treasury systems out there in the market, non-SAP systems, they fetch this information through some sort of API, which I call an interface, and claim that they can project this out very well. Well, the short answer is no, because they don't have the contract information. And in the future, with this new model, that contract information is sitting in a completely different place. So that is a limitation that a lot of these companies would encounter. And they need to think of the cash flow analysis in a different way.
Absolutely, and we're going to talk about that immediacy of the due in a moment. But the other one that was interesting is not only that, but what the fellow that I talked to and many other of these businesses have said is also, because you have the option of, even when you sign the contract, you often have the option of changing the date you want to pay, right? So maybe you and I get paid on the 1st and the 15th of the month, and so I want to pay you, Spotify, on the 17th of the month, because the first part of the month, all of my big bills like my mortgage or insurances are due. Later in the month, I want to pick the date that I want to get paid, but perhaps you get paid every 2 weeks, or perhaps there's a different, you become in control of that. And of course, that becomes an interesting challenge for a couple of different things. Obviously, from my perspective, on another side of the business, on revenue accounting, right? How do I know when to recognize that revenue? But on the cash and collection side, it's, no longer do I have bills being collected or paid on the 30th or the 15th. It's all over the place, right?
Yeah, that's exactly right. And John, actually, if you think about it from a broader perspective, as a finance ecosystem perspective, that is creating new opportunities for certain players to really smooth out these flows. So if you think about the supply chain financiers, right, that's what they do. They actually they play a role in smoothing out the cash flows by maybe offering some financing opportunities to one party, and the other party gets the money on time. And there are these kinds of opportunities also popping up in this area when everything is available as a service.
Yeah, that's perfect. Yeah, absolutely. So, interesting thing that you mentioned in a moment ago is this idea of aging is immediately overdue. I think that's really interesting because instead of managing your your accounts receivable, my 30, 60, 90, and trying to figure out when those when are you actually overdue? Anybody whose bill doesn't get paid is pretty much immediately overdue, right?
Yeah, exactly. I mean, if you look at the process a little more in granularity, your billing run is going to create the receivable item, but that receivable is gonna start to age right away. If it doesn't get paid on that day, it's older, it's overdue, because think of it this way: Spotify wants, or my contract says that I need to pay Spotify on the 15th of the month. So when they run their billing run on the 15th and generate their receivable, there's not going to be a payment term on it that says 15, pay X days from now. It's going to be right now. I need to go and collect. Now, that's why the aging starts immediately. and the item is overdue if it's not paid on the day of billing date right away.
Absolutely, and of course that has implications towards if you're not, how do you connect, so it's great, maybe you have a solution that's not connected, but the beauty of, the SAP cash and treasury management and all of that is its connection to fulfillment, if you will, or enablement, if you will, meaning, and believe me, we've all had this experience. Maybe your cable company doesn't get their bill in right away, and all of a sudden your TV doesn't work. They seem to be rather ungenerous. So it's so important to be able to connect those terms together, right?
Yeah, and I think, John, this connects to the previous point about contracts driving the terms. So this
Right.
actually shows the importance of being able to access the contract information for projecting out cash. Because if let's say you're running your billing run and the money is due right away, there's no forecast. It is like, the forecast is when you are projecting out in the future. And how can you project out in the future? You can do that when you know what the contract is going to be collecting in the future, which means you are going to have to depend on the contract information and not just the receivables information.
Exactly. And you know what's also, I'm sorry, what'd you say?
No, I didn't say anything. I think we're good. Keep going.
Yeah. No, what I was going to say is, it's interesting that we're talking about it from the receiver of the money's perspective, but this equally has an effect on outbound payments, right? So if I'm if I'm the person signing up for the subscription, the other, I need to be aware of the fact that, what, I've signed up for a contract, and I have to be aware of when those outgoing payments are taking place, because it may not be on a your normal schedule. You're not collecting, it's just happening. And so you also have to be aware of the fact that you're managing an outbound payments schedule, right? Are you still there, Harash?
Oh,
Hello?
sorry, I was speaking on mute. I'm sorry. So no, you're right. As you're thinking about this process from an end-to-end perspective, since the company that is using this model is generating a request to collect cash, the direct debits and things like that are going to be becoming more important. So either you direct debit into a customer's account, or you expect to charge their credit card. Now, depending on which industry this is in, the methods and the processes will look slightly different, but the concept is still the same. The company that is invoicing is going to expect that the cash is collected, and they would like to trigger a notification or a collection request to their customers and get it executed.
Absolutely, and it's a great way, used to look at the using 210 net 20, and we always think of the old days of 210 net 30 or 210 net 60 or whatever the terms are. And if you get 2% off if you pay within 10 days, a lot of companies, by the way, are offering, if you sign up for this as a direct debit or as a subscription, you can get discounts. So that's another aspect that people want to keep in mind. We talked about security, and I think that's a huge issue right now, because I think it's pretty apparent. You and I talked about this the other day again, where it's apparent what you have to secure. If it's a business to consumer environment, of course I have to secure your credit card or banking information or payment information. But you pointed out very well, and I think this is an interesting point. How are you securing it in a B2B when you're using the international banking network information and their bank account information? Maybe you can share some of your insights there.
Yeah, sure, John. So thinking about this, now that the process has changed, the kind of information that is going to be needed to manage it is going to be different. And thinking about the whole process, in today's world, treasurers typically are responsible for the security of payment transaction, which means they are responsible that the transaction has the right amount, it goes to the right beneficiary, and also that there's no unauthorized transaction in the process. Now, all of that is still true, but now you're adding a new dimension, because these could be potentially collections initiated by a company through direct debit or credit card transaction or payment card or whatever be the method. Since the company that is using this business model is initiating these transactions, they need to store the information, some additional information about the customer. For example, if it's a direct debit scenario, then you need to maintain the direct debit account in your SAP system, which means you need to secure that information. You can't store it and let somebody unauthorized have that information available. So that's point number one. Security of that data is going to be critical. In the earlier world, of course, SAP does allow you to store that information, for example, on the vendor master or on the business partners if you're talking treasury transactions. But now it's going to be more popular, more prevalent, means that nearly all your customers who are using this model, you're going to have to store this information, and the security of that information becomes even more important. SAP does have tools and solutions in place where you can mask some information, most information, all information. It can also log the details of who has accessed this kind of information and provide you some red flags if it's not meeting your policy and so on and so forth. So there are things that can be done to address this aspect, and you can't think of it in silo, because if you're thinking of just a treasury system, a TMS system, right, most likely they're not going to have this kind of data sitting in their environment anyway. So you really just can't execute this process unless you look at the whole thing from end-to-end perspective and think of what are those weak points where this information can get compromised, and you need to secure those. And this responsibility is going to be on the treasurers.
Absolutely, and as you think of that from when you said so well, around the TMSs or other solutions like that, if you don't have them hosted in the same environment or they're not part of an integrated solution, communications between those can become a point of vulnerability, and you want to minimize those points of vulnerability. And you'll hear things about how secure those points are, but we all know, and we hear stories every day about hackers who get into secret government websites and banking websites all the time to get information. And so this will become even more. And I know the penalties for some of these breaches and transactions can be quite hefty, and that will be on the burden of treasurers and the IT team supporting those treasurers in time. We talked about Spotify. I love your example of Spotify. I use Spotify, I use Apple Music, I use a lot of those different things. But what was interesting that you mentioned was the conversation about foreign exchange, interest rates, and we can talk about it on two different aspects, and maybe you can share your example of Spotify and the ideas, but it's this managing of foreign exchange and arbitraging and hedging it, I thought was very interesting. And then maybe as a second part of that, we'll talk about how actually they want to carry forward some of this information into the actual contract. So why don't we talk about the first one, managing all of these in the Spotify example?
Sure, John. And I think the way to think about this is the change that is going to occur. And let's just look at how things happen in today's world with the traditional sell, invoice, wait until the payment terms are due, and then collect. So in that model, sure, there is uncertainty. Sure, this could happen on pretty much any day, but many corporates have put in place processes where they have tried to make it more periodic rather than random, which means you invoice on a certain days of the week or the month, and then you have processes to collect and look for certain types of collection processes on certain other days, which means you're making it more sort of batch oriented. Now think of this from a Spotify perspective. And I love that company. Their music is great, so I like to cite them quite often. But think of it from their perspective. They have millions of customers, probably tens of millions of customers around the world, and each one of them has signed a contract on a completely different, excuse me, completely different day. So you can think of small amounts of cash going into the treasury system on pretty much every day, and it could run into millions of transactions. So the way treasurers used to manage their cash, which was a little more batch oriented, now is going to be sort of smaller transactions, more in number. And traditionally, treasurers are used to hedging, based on what my exposure is going to be for a certain period. Usually the buckets are monthly buckets, and then they try to hedge it. In this case, yes, it could still be monthly buckets, but you can see how much volatility there exists even in the monthly bucket, because it could pretty much be any day, any amount coming from any customer. And that also brings another dimension of sort of complexity in the way they look at their exposures and the way they hedge it. Now, overlay that with the company that is doing business in pretty much all parts of the world,
Right.
especially the digital companies. They can sell their products nearly anywhere as long as the internet exists. And they're going to be dealing with this complexity multiplied by the number of countries that, or rather number of currencies that they operate in. And so it's going to add a new dimension to the overall treasury processes as companies migrate from this traditional model of sell, invoice, wait until the payment terms are due, to sell, invoice, due immediately. And I think it's going to pose some new challenges to our customers as well.
Yeah, no, I agree. And we see that, with our customers as well, some of the larger companies, even the B2B companies like Adobe, McAfee, OpenText, and others who offer, these B2B products, they have similar issues. Quite often, it's a credit card at the the user level maybe is being taken care of. So absolutely, and of course they're doing it in a huge amounts of money. So absolutely. You also mentioned to me, and I thought was really interesting, that a lot of them are trying to push these which rates and how do you do foreign exchange with regard to the contracts themselves as they set the price. Let's say Spotify is $10 a month in the US is US dollars. Okay, so does that mean that it's what's your home currency and how are you setting those currency rates and planning those in other countries for Australian dollars or Chinese yuan or euros or something, right?
Yeah, I think Spotify may differ in the way they would look at it from compared to, say, a B2B type of company where the amount of the value of transaction could be higher. So there's going to be some differences in between the industries, but in principle, you're right, John. If the company's functional currency is, say, US dollars, and they're doing business in other countries, if the volume of the value of transaction is huge, I have heard from some of my customers that they would like to get the exchange rate on the spot so that they can value that deal in their home currency, which is your functional currency, then and there. And treasurer wants to see the exposure of that particular transaction on the spot. And I think that is going to create another new dimension of capability that customers are going to need, which is to get the rates on the spot as needed from probably from multiple bidders, and use those rates to value that individual transaction.
Absolutely, and of course, as we look at that from a revenue accounting perspective, it has that same types of implications. you're using, how do you value that, and how do you value the variations in the value of those currencies over time? If I have a multi-year, I sign up for a 3-year Spotify contract, we all know that, the exchange rates will fluctuate, and therefore, how do you make sure that you're accounting for all of that as you begin to recognize, the revenue and the variation over time? And we do a lot of that with fairly large companies, even hardware companies that are offering, hardware solutions and services that go with it. So, even services or software licenses that you get with your hardware, all of those have that same issue and challenge, of course, right?
So one of the things I would like to highlight, and this is not something that we are just imagining. In fact, one of our customers recently asked us, could they use our market rates application to price their contracts? And of course, you can do that, but I think it's going to bring in some additional complexities, in the sense that the volume of data that was primarily used for Treasury in the earlier world now is going to be used for pricing individual transactions, which means there's going to be some implications on their consumption of the market data as well. So this basically requires some changes in the contracts and things like that.
Right. Mm-hmm. Absolutely. And of course, on the person paying, you're looking at how you're paying. I have subscriptions to some services that are, I do a lot of work in woodworking and antique restoration, and I have a subscription I sign up for in the UK, and it's billed to me, and I signed up in pounds, but the amount in dollars changes for me almost every month. And so it's, I don't have that same level of cash management issue, but firms who sign up may have some of those issues, and you may have to look at, if I've signed up for 10,000 licenses, am I buying all those licenses in the same country at the same price? Are there foreign exchange issues I have to deal with? So it's on both sides, as we said before. Another interesting thing, Horesh, and we talked a little bit about this, but as it occurs to me before we jump into the next topic, is all of these items, from a banking perspective, the more of these transactions you do, of course, the more fees you can end up paying to a bank. The interesting observation we had was with this customer and a couple of others was, while they have seen a significant decrease in idle cash and in other areas, they have seen a huge increase in their banking fees. And of course, SAP offers lots of tools to help you with that. But is that something you're starting to hear as well?
Yeah, I think the banking fees right now is more focused on, customers are looking at their banks and saying, hey, am I paying more for the services that could be available cheaper from other providers? And yes, that question comes up regardless of which model they choose, but more so when they're looking at just transforming into this digital economy, and they're just giving it a second thought. Hey, should I also look at my banking contracts? Am I going to be optimized as I use these banking services? So in that regard, we have introduced what we call bank relationship dashboard, where customers are now able to look at which bank accounts they hold, what kind of transactions are being processed, how much volume is being processed. And we also have introduced applications where customers can receive the bank services file electronically. It's known as CAMT86 file, and SAP can report the fees charged under different service codes into a dashboard. And now you get analytical information around how well your banks are providing you the services for the money that they're charging.
Yeah, no, that's great. And I know, obviously having tools like, the bank the bank account management tools, in particular, multi-bank connectivity, all of those absolutely facilitates that even more to give you that holistic picture of everything, right?
Yep.
So it's funny, we mentioned the banks, and we'll wrap up with this quick one because you and I spoke about this. Um, I had asked you, hey, does this have an implication in in-house cash? And we were sort of, well, maybe. But then we talked about collections on behalf of, and you kind of perked up, and I thought you had an interesting thought process on, wait a minute, if you're collecting on behalf of, there might be something very interesting in that. Maybe you could talk about that for a second.
Yeah, sure. And maybe, many people are familiar with Spotify model. So let's just think about that. Spotify is a Swedish company, but they are present pretty much in all parts of the world. Most likely, they have several subsidiaries that are doing business in individual countries, partly because of legal reasons, partly because of cash management and other sort of corporate reasons. So the reason why in-house cash becomes relevant for some of these companies who are operating globally is, and especially with the new models, is that as they're collecting cash, they can use in-house cash for collection on behalf of, which is a COBO process. Some companies like to call it ROBO, which is receivables on behalf of, but essentially you're collecting in this case. Let's just call it COBO, collection on behalf of process. In the past, collection on behalf of was a difficult proposition. Why? Because you cannot control what customers provide in the details of their payments. Sometimes they just provide an invoice number, sometimes some dates, sometimes a combination of the two, sometimes nothing, and sometimes just, hey, just some independent text saying, I want to pay you, that's why I'm paying you, right? And that information is not sufficient for SAP or any system for that matter to determine where that receivable belongs. I'm sorry, where the cash belongs. And collection on behalf of process was always a challenge in the earlier model. But now shift the gear to this whole new economy, subscription economy / digital economy, where a lot of the collection activities are triggered by the seller themselves. Spotify in this case, or Amazon, for example, they are issuing the collection request, which means they have knowledge of what this collection is for, what is the invoice number, and they can enforce some rules into the process where they receive the same invoice information back in the transaction. And if you have that, then you can receive that information into your in-house bank and allocate that to the subsidiaries, because now you have the information to determine that that particular invoice was originated in subsidiary 1, another invoice originated in subsidiary 2. And as long as you have that information, you can route it correctly, which means collection on behalf of becomes even more effective in this new model.
Right, and the integration required and the power of that is your ability to look end to end throughout the system and understand where the contract originated from, apply it to that contract, understand the relationship with that particular customer, and make sure that you're continuing to provision or allow them to access the key services that they have. So again, sure, you could probably get a collection agency or other tools to do this, but it would be much less efficient than using a tool like that SAP provides through in-house cash and other tools to provide not only the linkages but the insights, right?
Exactly. I mean, a lot of these tools have existed for a long time, but customers have not seen them in this new light as to how they create better and bigger opportunities for them to reap benefits from the SAP solutions.
Absolutely, and every year you guys come out in the Treasury team with just more and more tremendous functionality. I think teams need to sit back. Not only that, but we've had numerous conversations. There's functionality even in ECC. S/4HANA, obviously the direction we all want to move. It's such a powerful integrated solution, but there's so much in existing SAP cash management and treasury that can help enable this, that I certainly would encourage companies to take a look at that as they begin to contemplate their moves to S/4HANA. So Haresh, thank you very much. Why don't we have a couple minutes left. We'll wrap up and give some questions. In wrapping up, I think we can see that the digital economy is having some very positive effects. One of them is this idea of smoothing cash flow. Not only smoothing the cash flow itself, but improving the assurance of that cash flow. As you have an ACH or you have a credit card, generally speaking, those cash flows are pretty strong. You can be pretty sure that you're going to collect that money. Occasionally, you'll certainly have issues and challenges with a need for updating the credit card dates, or maybe you've changed banks. But overall, the digital economy is providing this smoothing of cash flow. But it still has, as Haresh, very nicely pointed out, some challenges. Security we talked about. Cash flow forecasting, you would think, and maybe Haresh, you can comment about this for real quick for a second. One might think that by having more of these smoothed out flows, that the need for cash flow and liquidity forecasting has gone down. But probably the truth of the matter is you have to manage that timing a little bit more intensely, right?
Yeah, and as I pointed out earlier, you have to look further back in the process into the contract, number one, right? That's an important
Right.
aspect, which you cannot do if your treasury is just fetching the open receivables from general ledger. So that's one. The second is that there are new factors that kick in as you're managing your cash. Number one, if it's a credit card based payment, small amount payments usually tend to be credit card based if they're business to consumer, then there's a chance that the credit card might be invalid, or maybe it got closed, maybe it expired, or something else happened. Those kinds of events will impact the cash flow. So even though you might get the projections, if you don't have the full information, you're not collecting some additional information about the credit worthiness of the customer and so on and so forth, you're going to run into cash flow inaccuracies. So on one hand, because you are initiating the collection activity, you probably have more visibility to it because you know that contract says money coming in the 15th. That means you can expect that. But at the same time, there are these other new dimensions that will make that cash flow more uncertain, and you're going to have to manage both.
Absolutely, yeah. And you just touched on the collections idea. You always know that in this kind of a situation, generally speaking, certainly if it's paid in arrears, sometimes you do have pay in advance. Collections becomes an issue, and how do you manage that and make sure that you're following up on those items? I think it's crucial that Treasury must be part of an end-to-end order-to-cash process. Haresh, you absolutely nailed it when you said, overall, you can't look at Treasury as just a standalone island. Really, in this case, and over time, it's really part of an end-to-end order to cash. It's looking at the contract. It's looking in, how are these being fulfilled? When are you collecting? How are you collecting? How do you recognize that? And clearly, Treasury needs to be part of that and will be responsible for that in the process and securing that process. And I think integration and an integrated solution is key to you being successful in the digital solutions economy. We talked about how important it is to have tools like the ones SAP provides to provide a totally integrated solution using all of the cash management and treasury tools, but BRIM, as well as revenue accounting and all of the other reporting tools that are available integrated into the SAP core finance GL. And that is certainly made that much more powerful through the use of SAP S/4HANA and the Universal Journal. So it gives you that real-time sense. So with that, we'll wrap up. Haresh, let me see if there's any questions here. I don't see any online. Is there anything that you wanted to just add before we wrap up?
No, I think, John, you covered it all. I think this session is is an important one for customers really thinking about their business model. And you hit the nail on the head as well, that customers have to think from end-to-end perspective, because if they're thinking about treasury in a piecemeal on a piecemeal basis, then they're going to run into challenges as they transform their business activities.
Absolutely. All right. Well, with that, I am going to wrap up here. I want to thank you, Haresh, as always. I've absolutely enjoyed both the webinar itself, but the lead up and the talk about all of these new thought leadership items. We'll look to see more from you and the team as we do more of these throughout the year. And I want to thank all of you for listening in and taking time out of your day to spend time with us. And for those of you here in the United States and those of you, I want to wish you all a very happy Thanksgiving and a terrific day. Thank you very much.
Thank you.